Bitcoin has pulled back about 5% from its all-time high at 126K, and the market is currently showing mixed sentiment. During the same period, Ethereum dropped almost twice as much with the correction of nearly 10%. But right at this moment, a critical signal has appeared on ETH chart. In today's video, we're going to break down the signal in detail and more importantly, discuss how we can trade it in real-world market conditions. If you're interested in Ethereum, you definitely don't want to miss this one. Stay focused and make sure to watch until the very end. This analysis could make a real difference in your trading decisions. What's up everyone, it's JC here. So in my previous video, I uploaded a video sharing my latest outlook on Bitcoin. So I mentioned that as long as Bitcoin keeps consolidating around the 120K range is not a bad sign at all. And I also mentioned that the highly anticipated pullback to that neckline 118K is actually less likely to happen. But of course, if it does reach this level, it's a solid buying opportunity. However, since that zone could attract a lot of retail traders, your stop loss should be set tighter than usual. And if you want to learn more about my detailed entry-level stop loss setups and execution strategy, I highly recommend checking out my previous video. It will give you a clearer picture of how I structure my trades in real time. And let's take a closer look at the chart. After the video went live, Bitcoin saw a slight drop during yesterday's session, briefly breaking below 120K. But it found support right at 119.6K and bounced right back. During that dip, I took a small long position and my current average entry is around 119.9K. So far, things are playing out just as I explained in my last video. Then now, what's today's video about? As I mentioned in the intro, today I'm going to talk about Ethereum's short-term setup and how I'm approaching the current structure in detail. While reviewing the ETH chart, a certain pattern really caught my eye and I want to share it with you. Watch till the end, it will help you make your own call. Before we dive in, please hit subscribe and like. I really appreciate the support. Right now, we're looking at the 4-hour Ethereum chart. Compared to Bitcoin, Ethereum has seen a slightly deeper correction recently, but it's now showing a mild rebound after finding support at this horizontal level. And when you zoom out and look at the broader structure, one clear pattern stands out. An inverse head and shoulders pattern. And for those who might not be so familiar with the inverse head and shoulders pattern, I can give you a quick explanation. The inverse head and shoulders pattern is basically the opposite of the head and shoulders pattern. In a regular head and shoulders pattern, the price forms the left shoulder, then a higher peak that becomes the head, and then the neckline is created, and then a right shoulder around the similar level to the left one. And once the neckline is broken downside, it usually signals a bearish reversal, a classic sign that price could drop further. The inverse head and shoulders pattern, on the other hand, works in the opposite way. Price forms a left shoulder, then a lower dip that becomes the head, neckline is formed, and builds a right shoulder afterwards. And if the neckline breaks to the upside, it's often interpreted as a bullish reversal signal, a setup that can lead to a strong upward move. Now, if we take a closer look at the Ethereum chart, we can clearly see the formation of the left shoulder, the head, and the ongoing development of the right shoulder with the neckline taking shape along the way. So if Ethereum breaks above this neckline from here, it would likely confirm a classic inverse head and shoulders pattern, which often leads to a strong upward trend movement. Right now, it's just uncertain whether the right shoulder will hold support near the left shoulder's level or form a slightly deeper pullback before the structure is fully established. So let's talk about how we can actually approach trading this setup. So there's two main strategies. One is the breakout entry. Two is the pullback entry. Okay, starting with the breakout entry. So this means waiting for the right shoulder of the inverse head and shoulders pattern to complete and then entering after a confirmed breakout above the neckline. This approach tends to be safer because once the neckline breaks, the probability of a strong trend wave increases. However, the risk to reward ratio is usually a bit lower in this type of entry. So if you choose the breakout strategy, your stop loss should be placed at the low of the right shoulder, and you can set your target roughly at 1-to-1 risk to reward ratio based on the distance. For example, if we assume this 42.60 level is the low of the right shoulder, the 11% move from shoulder to the neckline projects the same 11% move upwards, which targets $5,300 in terms of price. If we go with the second approach, which is the pullback entry, that means starting to accumulate from the current levels, adding more gradually on each dip. This method offers a better potential reward since entering earlier, but because we're buying before a confirmed breakout of the neckline, the probability of success is lower compared to the breakout strategy. In this case, your stop loss should be around the head's low, which sits around $38.20 in terms of price. So buying here gives you less probability of winning the trade, but much better risk to reward ratio. So to wrap this up, Ethereum is currently forming an inverse head and shoulders pattern. So if the right shoulder completes and the neckline breaks to the upside, and there's strong possibility that a new bullish trend wave will follow. For a breakout entry, which is entering after the breakout of the neckline is confirmed, it's a safer setup with the higher probability, but the risk to reward ratio is around 1-to-1, and your stop loss should be set at the low of the right shoulder. For a pullback entry, which is accumulating from the current levels, and gradually more on each dip, the probability of winning the trade becomes lower since you're entering before the confirmation of the breakout of this neckline. However, the potential reward improves to roughly 2-to-1, so basically you get more rewards. And the stop loss should be placed at the low of the head. Yup, that's pretty much it for today's video. And if today's analysis helped you get a clear view of the market, make sure to hit subscribe and like, and I'll keep bringing more insights that can genuinely help your trading decisions. Thank you for watching, and I'll see you in the next video.